We have an exciting setup developing in our metals complex with the next leg of our silver rally. I'm focusing today on two silver miner ETFs, first of which is SIL or SIL, which is the Global X Silver Miners ETF, and SILJ, which is the ETEMG Prime Junior Silver Miners ETF. For details on the component stocks of these ETFs, please consult the description below. In short, we are in the midst of completing a long fourth wave consolidation that has lasted the better part of a year. The following fifth wave could be a great opportunity, as fifth waves are often extended in commodities and cryptocurrencies. We may have quite some upside coming. Both ETFs, of course, are covering similar patterns. In addition, GDX and GDXJ, which are the gold miner analogs to these silver miner ETFs, are also following very similar patterns, which may be covered in a separate future video. While I'll be focusing mainly on the non-leveraged setup of buying straight SIL and SILJ shares, I'll also dig a little bit into leveraged call option plays. In front of us is the 4-hour logarithmic chart for SIL, and SIL had quite a rally from our March 2020 bottom, which was the bottom for a lot of different asset classes, including the metals. We went from about $16 all the way to $50+ in a matter of months. And the top of that rally is what I'm calling a third wave top. And ever since then, we've had a grinding, slow, and endless fourth wave consolidation that's gone sideways. And as ugly as this looks, this does fit the right Fibonacci extensions and shape for an ABC correction, with, of course, the last leg of this correction during this past summer being considered the C wave. Since that point, we have what appears to be a micro 5-wave impulse in place, which is marked with the subwave 1 marker here, and we've actually started to pull back in what I'm calling a subwave 2. Based on what we have so far on the small picture, this 1-2 setup, we have projections taking us to the $53 to $56 range for this leg of the rally. In addition, we have several confluences that seem to target that same zone for SIL. Firstly, we have our big 3-4. If we take a Fibonacci extension off of the big 3-4, the 0.382 extension aligns with that zone as well, which falls right on the $54 mark. And if we look at the 1-2, which is not quite as visible here, based on a 1-2, the top of your fifth wave will hit 1.764 or the 2.0 extension, and the 1.764 extension falls not too far away from that spot. If we do get to that $53 to $54 mark, that's a 41% gain from where we are right now. However, as fifth wave extensions are common in commodities and there's the potential for blow-offs, we have a target at the 0.61 extension of the larger 3-4 that could take us to $71 plus for an 87% gain from where we are right at this moment. As mentioned earlier, SILJ has almost an identical pattern. However, there's one key technical difference here. We struck a higher high around February, which I am recognizing as potentially the top of a larger impulse. The reason for this is that this green pattern gives us a 1, 2, 3, 4, 5. And because of this double peak top, this would fit better based on this pattern. The purple pattern that is also marked is identical to that of SIL. Regardless, we've had a good pullback. And if this is the green pattern, this would be the wave 2 pullback. If it's the purple, it's the same as SIL. It's a fourth wave pullback. Based on the micro 1-2 setup that we have in SILJ, our top is projecting somewhere between $19 and $21. And just like with SIL, our larger equivalences are showing the potential to hit $19. So there's confluence there with the 0.32 extension of the larger 3-4, as well as the 2.0 extension of the larger 1-2, which again is a common top target for the fifth wave based on the 1-2. Getting to this $19 to $21 range would give us a 50% gain from where we are at this moment. And of course, because of the blow-off potential that we have in commodities, our 0.618 extension targets about $26, and getting to that range would give us a 104% return from where we are right now. So that's pretty good for a non-leveraged play. Going back to the difference between the green and purple, there isn't much of a difference practically speaking, especially for this fifth wave that I'm expecting. The difference would come after we peak. If we're following the purple pattern, that would align with what we see in SIL. Expect a really ugly pullback for a larger degree wave 2. However, if we're following this green pattern, which is a bit more bullish, this would be a smaller degree first wave with a smaller degree second wave that wouldn't fall as deeply. So until we get there, not much of a difference in the real world. In the short-term picture on SIL, this is a close-up view of our 5-wave impulse, and you see a 1, 2, 3, 4, 5, followed by a pullback. This pullback is deep enough to be considered a completed second wave, but typically you see a corrective behavior. You see an A, B wave bounce, and a C wave to finish things. And when we look at the MACD, we're pretty oversold at the moment. So we may be done. We may have another bounce and then a final finishing to this wave 2 correction. So expect this to take a couple more days to complete, maybe another week or so. We'll see. In order to confirm that this bottom is in, we need this wave 2 to complete, and then we need to rally past the top of about where the $42 mark is, where the top of the previous subwave 1 peak was. For the immediate bullish setup to hold, we need to hold support at 34.30, which is marked with a red line here. In SILJ, the situation is almost identical. We have our 5 waves up, and we are presumably in the middle of a wave 2 correction that may take several more days to complete. For our immediate upside setup to remain valid, we need to hold the 1143 support, which is shown at the bottom with the red line. And to confirm that we are really on our way, we need to rally past about 1458, which is the top of the subwave 1 rally. Now, if you're looking to buy either of these ETFs, we are in a good place to buy. We're in the buy box. And overall, big picture, this is a safe place to buy. We've had a long winding consolidation, so there's not much downside risk relative to the upside that may be to come. One final note I'll make on these charts is that for both SIL and SILJ, you'll notice that the tops project a bit lower than what you saw on the big picture charts. And that's because these are linear charts. They're not logarithmic. They project a little bit differently. With all that being said, there is a leveraged options play to make here. So of course, using leveraged call options is a high risk play. So please be mindful of your allocations and don't overdo it. But for SIL specifically, right now, there is not great liquidity for the spring. I do expect our tops in SILJ and SIL to occur sometime in Q1 of 2022, whether that's going to be in January or February, not sure. It may take a bit longer. So the rule is you want to get as much data as possible, buy as much time as you could possibly need. As fourth waves are deceptive, they sometimes grind on indefinitely, and fifth waves are often slow in their development. So we need to make sure we buy as far as possible to be safe. So while January options have great liquidity, I would not recommend buying anything in January because it's a little too early. For SIL specifically, April 14th, 2022, 50 strike calls seem to have good liquidity. And for SILJ, I am eyeing calls for February 18th of 2022 at $15 and $20 strikes, as well as May 20th, 2022, 15 strike calls. That May call will be the safest option. If I had a choice, I'd like to buy March or April, but we must deal with the hands that we are dealt. I'm going to mention again, the liquidity is not great beyond January. So these strikes were chosen for calls that have at least an open interest of 1,000 or greater. As for return projections, based on the conservative extension, hitting the 0.382 extension, either SIL or SILJ, I have a rough calculation of about 13x potentially, but that again doesn't include the potential for a blow-off taking us much higher or the rally taking place much quicker. So it's an awesome time to start getting in. I'm personally going to wait to enter leverage positions until we complete that wave 2 and we get past the top of the subwave 1. That's going to be my cue to get in for leverage. If you are trying to buy non-leveraged shares of either ETF, it's a good time to start accumulating. You can buy a big chunk now. You can buy over the next few days or weeks, but this is looking pretty lucrative right now. For continuing updates on this development, don't forget to subscribe. And if you enjoyed my video, please like. Until next time, thank you for watching and happy trading.